What's up, traders and investors? Todd here of tradinganalysis.com and Inside Edge Capital, which we're gearing up to officially launch. Hope you guys are doing well. It is now August 16th, 2 weeks ago in August. Messy stock market here, a lot of headline news. I'll take you through what I think is happening in the market, show you my positions. I'll give you the, I think the key driver of this market. I'll give you the technical position. I know you guys all love the Elliott Wave. Show you what's going on there. So let's do it. Now, I tend to run a little long in these free videos. I got to get to the point. I know you guys don't like to hang around for more than like 6 or 7 minutes or 8 minutes, so I'm putting myself on a timer, okay? I save the long stuff and the in-depth stuff for members. All right, let's go. Oops, I just restarted it. You get an extra 45 seconds. All right, so nasty out there today, and one of the key drivers I think right now is going to be interest rates. Right, so we've got to really understand what's going on with the fixed income market, these long yields, and basically what's happening is the yield on the 10-year Treasury broke the 4.07% resistance. Right, we got up to like 4.2, 4.25. It's, I'll show you here in a later chart. In 2021, 2022 was problematic for the stock market, and specifically growth trades, as rates went up, inflation was raging, and it made the valuation argument to hold growth stocks tough to make, and that's why we saw a big move into value. Well, it's kind of coming undone, and I'll explain why I think what's going on. But before we get too much into it, listen, I've been trading for I'm 44. I've been trading, since I was 18, but I was professionally trading first at 22. So I guess I've been doing this professionally for 22 years. There's a few certainties that I can tell you, okay? You're going to take losses. Your job is to minimize those losses, constantly manage risk, but most importantly, realize there are times to be aggressive in the market and it should make sense. And there's other times when it won't make sense. Holiday times, thin, summer, the junior traders on the desk, the senior guys are, in the Hamptons or in the south of France, messing around. I'm going to the beach tomorrow, meet up with the family that's already there. So things get a little goofy, especially at the end of August, which is, 8 months into a very busy year. So just definitely consider that. Okay. So back to it. Rates are pushing up. Now, if we were to somehow get in a liquid move and really start breaking this 4.33 resistance and really start to go parabolic, that could be problematic. But I'm okay with long rates going up, and I'll try to explain why, and then I'll tie it back to the technical position of the market, okay? Now, listen, I don't like, losing money. This is the account that I trade publicly for members at Trading Analysis. I've got the rest of my money in my wealth management business, and I trade this money for clients at Trade Analysis, right? So had kind of a bad day, down 12, 14 grand today, but whatever. I have some pretty good open positions there. And listen, do I want to sell? Am I cautious? Do I want to pay a bunch of tax on this? No. Can I hedge? Yes. We went over some hedging ideas with clients with options, but I don't think we're there. And I'm okay with this drawdown, and I'll show you where I think we may stop. But I want to give you the background. So this is a report. We do this every week for clients and customers. So this is our Taco Tuesday report. And it's not just the long-term rates that I just mentioned, these 10 years. You also got to look at where the 2-year is. The 2-year is one of the key drivers of where the Fed sets short-term policy. And what's the first thing you're going to notice is these 2-year yields relative to the March high are making a lower high. The 10-year yield is starting to make a higher high, right? Longer-term rates are going up as short-term rates are kind of staying sideways, right? We had the Fed minutes today. And they, of course, are trying to bash us over the head using basically verbal abuse of higher for longer. We're resolute on 2% inflation target, blah, blah, blah. Did the Fed fund futures move in terms of hikes at coming meetings? So we're looking out to September, a month out. Right now, we're 5.25, 5.5 is the current rate. it went up about 3%. So we're at a 13% chance of a 25 basis point increase in September. They're most likely on hold in September. And then November, we are at a 35% chance plus 4%. So we're at a 39% chance of 25 basis points in November. There's a long time until then. So the answer is no after the Fed minutes. Did we readjust the chance of an increase? No. FactSet, John Butters does great work. Guys, Q2 earnings were really good. Okay, 84% of the companies reported earnings in Q2 as of last week. Of those companies, 79 beat EPS estimates, above the 5-year average 77 and 10-year average of 73. Okay, and average, they exceeded estimates by 7%, which is, you can go on and get some more details there. So it was a good earnings season, and forward guidance for Q3 was also pretty good, right? So back to the presentation that we made for clients, it's like, okay, what's going on with these 10-2s? Well, as the Fed is anchoring and the market is starting to see terminal short-term Fed funds and those long-term rates are going up, what is that doing? That is creating a yield curve that is steepening. It's taking the inversion out, which so many people are saying inversion is going to lead to a recession, stock market sell-off. Okay, so we're starting to see the yield curve move back towards the zero, right? We're still at 70 basis points of inversion, and this is a more in-depth concept that, we can talk about it another time. But if you look at the real yield curve, when you factor in inflation, the inversion is roughly half of that. Okay, so what is the relationship? Now, this is a difficult chart. I've shown you guys this before. So this is this is Vanguard growth value ratio. So Vanguard growth ETF divided into value ratio, Vanguard value. So growth divided into value. And as the green line is moving down, growth is underperforming value. Value is outperforming growth. As the green line is moving up, growth is outperforming value. And you can see since 2021 and even before that, pretty good correlation between the yield curve heading towards inversion and value outperforming growth. All of a sudden, calendar flips, 2023, growth goes on a tear, okay? And we've pulled back a little bit, and we're starting to actually make a hook, and I'll show you that in the next slide here. And of course, what's accompanying it is the yield curve starting to move up, right? And as I mentioned, the real yield curve is up around here. So, it's interesting. So I was playing a game with our members here today. So I was like, this is the chart we showed last week. So this is the same value growth ratio I showed you. This is mid cap value growth. This is small cap value growth. There's your 10-2 curve. This is last week. This is this week. See those little hooks? We're starting to actually rotate back into growth, even though it feels nasty right now. And again, it's because I think the yield curve is starting to normalize. Okay. All right. So where does that leave us with the stock market? Okay. Here's the Nasdaq. I think the Nasdaq technical position is a lot better than the S&P. S&P is pretty sloppy. Okay. So just giving you the big picture. This is the weekly NDX. All right. We are kind of messing around with this 78% retracement. And this is a key technical retracement level. We broke through it, back below it. We're kind of messing around here. Bears would say this is a 3-wave move, this is a 5-wave move, and we're going to get cracked. Okay. Is it possible? Sure. Do I think it's going to happen? No, I don't. Especially when people are getting all wound up for, a mid-August move here. Okay. So I think the NASDAQ correction completed here in December of 22. I think we're all rallying in a 5-wave move. It's going to be green 1, green 2. Beautiful 1.618 projection. That's a textbook wave 3. Pulling back in wave 4. We have 4v2, 4v3, Fibonacci support, textbook support between 14.8 and the NASDAQ and 14.1. And we can even get a little smaller, bring in the next smaller degree, ABC. So I do think we're going to get some pullbacks here. It might spike down to 14.5, but again, if those longer term rates want to keep going higher, that's okay with me. Okay. If those longer term rates go higher in a somewhat orderly pace, what is that doing? That's normalizing the yield curve, right? So let's take a look at this. All right. People are going to say, if you listen to the news at all, everyone's like, oh, yield curve inversion, which is right here. It's happened the last two times were 2006 and 2000. Well, we had yield curve inversion. This is the same 10-2 spread that I showed you in the last chart. This is just on a different charting package. And with the yield curve inversion came the gray area, which is recession, and a stock market sell-off, right? So you have yield curve inversion, recession, stock market sell-off. Yield curve inversion, recession, stock market sell-off. So obviously we must be headed for recession, stock market sell-off, right? Well, guys, let's set the recency bias aside and let's look at what's happened in other times. Okay, let's look before 2000. We had a yield curve inversion that was quite significant. It was like almost 200 basis points of inversion here on the right scale, 197 back in 1980, coming out of the stagflationary 70s. What happened? As soon as we got out of the pits of yield curve inversion, stock market and blue rallied. Set back, made a higher low. We had another dip down into inversion. Stock market sold off from here to here and then went on a tear. Okay, then we got another yield curve inversion here, 89, heading into the first Gulf War. Stock market buy signal. Stock market rallied from there. We got another one at the start of the Gulf War. Okay, stock market sold off just a touch, preceded by yield curve inversion, and the stock market went on a tear. So you have three occasions here where yield curve inversion did bring recession, but it was an S&P buy signal, right? So you have two times where it was a sell signal in stocks, three times when it was a buy signal, and I can tell you the 2000 era is much different. 2000s is much different by way of intermarket relationships compared to what was happening in the 80s. Has to do with commodities, inflation, disinflation, and then Jim O'Neill's bricks. I've talked about that in other videos, but just let's leave that one here. I'm already at 11 minutes. I'm trying to keep my videos shorter on these free guys because you guys don't like to watch more than 6 or 7 minutes. So if you made it this far, I appreciate it. Throw a question, comment, insult, or thumbs up in the YouTube window. I would appreciate it, and I hope you guys have a great night. I wouldn't worry too much. It is August. It's thin. It's whippy. And we are coming up on Nvidia earnings. Let's do one more. I can't leave you guys. I'm having too much fun. Let's go Nvidia. Nvidia coming up next week on the 23rd. Let's look at the red count. I think the correction may have already been done. Nvidia got upgraded. This is going to be a big one. Chips are looking solid. As I mentioned, tech. I was looking at software. I was looking at some other technology growth names that are starting to rotate in. Could get interesting. So, all right, I'm going to leave it there. Guys, have a great night. Thanks again for watching, and I will see you on the next video update. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.